Hello, everybody, and welcome to another episode of Chart Request Live. I am still Sam Gatlin, analyst at All Star Charts, and this week I am joined by my very esteemed colleague and co-host, Mr. Jason Purse of Against All Odds Research. He's also my better half at the ASC Gold Rush. So when we're done with this video, we're gonna go put together a video for Gold Rush Premium members that will go out later today. So if you're not familiar with what we're doing at ASC Gold Rush, don't hesitate to go check it out on the All Star Charts blog. We're putting out incredible research from all things commodity related stocks. We just talked about cotton on Friday. Jason's putting together a bond report for today, and we're also talking about precious metals constantly. And you all see the charts. These miners are off the charts in precious metals, absolutely ripping higher. So we've been absolutely crushing it over there. So go check out ASC Gold Rush if you are not familiar with it. I don't think you'll be disappointed with what you see, but anyways, Jason, what are you seeing in the markets? I saw a lot of big green sticks on Friday. The Dow Jones Industrial Average, a little gap and go to new all-time highs on Friday, giving back a little bit today, but I know you're kind of, you dabble in the economic data and the Fed speak and the Jackson's holes and
I dabble in the fundamentals quite a bit.
yeah, so tell us about it because I don't know anything. I saw the market's reaction and it seemed like the market liked what Mr. Powell had to say on Friday, but I couldn't tell you the first thing about what was discussed there.
Well, that's, first off, that's why we look at the charts first, because, I could have the craziest idea in the world and it could be completely right if the market goes with it. And I could have the craziest idea in the world and it could be completely wrong if the market doesn't go with it. We only get paid by the price action. But, something I've been talking about for a long time, which is the fact that the Fed, the 2% rate for inflation for the Fed, even though that's pretty high. If you compound that over time, that's a pretty high rate of inflation. We actually in the United States didn't have inflation for many years. And then once after the 70s happened, we decided we're going to keep inflation at 2% forever and ever and ever. And that was going to be the end of it. Now, we've been talking for the last couple of years about the fact that they can't sustain that rate. Inflation is going to be way too sticky after they pump the market full of money in 2020, whether they basically gave out, loans to normal people, loans to businesses. All you really had to do is have a pulse that year and you could get a bunch of money. So they gave all that money out. Then supply chains got distorted. Then a lot of things happened in the commodities markets. So basically, you kind of have this very sticky inflation scenario at the moment, and I think that's going to continue. And part of the reason why I'm saying that's going to continue is also not just my thinking. The Fed's also thinking the same thing. I've been saying they're going to raise that target inflation rate from 2% to 3%. Now they finally came out and said that they're going to raise that target inflation rate. They're finally seeing the unemployment data has actually been bad for a pretty long time. Now they're saying, oh, we're seeing the unemployment data. Now we know we have to change our policy. It's really political pressure. To me, at the end of the day, it's political pressure. You have the situation with Donald Trump wanting lower rates. You have Congress wanting lower rates. You basically have everybody with a pulse wanting lower rates as well. So at the moment, I think he's getting a lot of pressure to do that. He's going to start doing that. And I think it's going to really ignite all of our trades over here at the Gold Rush. I think we already have some great trades. Our trades have been working out phenomenal. We're in the best sector of the year. However, at the same time, there's a lot more commodities that are ready to go. We never saw copper really break down. Had a huge false breakdown signal, but it never made a new 52-week low. It never broke that 425 level. So it's still hanging out in the commodity cycle. Next thing, what we need to see is oil. And that's going to be the thing that's going to be on my radar to say, hey, Powell really did make a mistake here, or the Fed made a mistake here. I don't really want to blame it on Powell, but the Fed made a mistake here by lowering rates. We're going to start to see this start to pick up, and we're going to see it in commodity prices more than anything. But I think it's going to be broad. I think what we saw on Friday was the market going, yeah, this is great. This is all going to work out. And I think we're going to see that broadly for some time. So I think it's a good time to participate in the market to the upside, whether you're in stocks, whether you're in commodity-based stocks like we are at the Gold Rush, or whether you're starting to look at some of these dead commodity areas like oil.
Totally. I was tweeting a chart this weekend of the energy sector spider, the XLE, with its highest short interest in years. And then if you go and look at the COT for the energy markets, you see the speculators, the historically dumb money, is betting more aggressively against crude oil than they have in decades, Jason. Right as crude oil is at the lower bounds of a very well-defined multi-year range. So do you think the speculators are wrong and they're going to get blasted here, or do they have it right? And crude oil is going to break down because I don't know. They could be right. They don't have the best track record, but this chart, it doesn't really look bullish, Jason. Do you think this will continue to hold?
Yeah, I think for me, if I'm looking at oil, I'd rather bet on upside than downside here, unless we see a great resolution of the downside. Now, once again, I'm not saying I want to take a bet on oil either way at the moment. But if I'm just looking at it and looking at the false breakdown signal, if we're getting back above these levels, I'm going to say, hey, we're going to probably have more upside. If we get above 80, like I think we're hitting 100 pretty quickly. Really, the range here is a huge range, and we've been stuck in it for a long time, and its volatility is incredibly low. And so it looks like we're ready to really make a move. So I think at the end of the day, it's just continue to pay attention to it, continue to be ready to make that move when it happens, and we'll see where we end up.
Totally. That's a good answer. So yeah, we are a few minutes into the show. So why don't we get into some of our mailbag tickers, Jason? So everyone who's new here, we have a mailbag for Chart Request Live. We start every show with. If you send us your ticker at questions@stockmarketmedia.com, we will get to your ticker first thing in the show. And then once we're done with those names, we move over to the YouTube chat. I see we already have some action there. Mr. Zerby, Wavy McFly, Eric. We've got Frank and Lobs in the house. We've got a packed house today in the YouTube channel. So if you're watching this on Twitter and want us to cover one of your charts, pop on over to YouTube where we can see your request, and we will get to it later in the show if we have time. But Jason, what is the first ticker today?
It looks like FTS. FTS is the first ticker for today.
Fortis. Okay. What do we have here? This is a $25 billion utility stock. So huge shout out to the utility stocks. They have been monster winners recently. Not a lot of love for them though. They're kind of a lot of them are boring, just slow and steady winners. Yeah, of course you have things like the new nuclear energy utilities and the GE Vernova. So you've had some monster winners there, no doubt about it. But Fortis looks like one of those slow, steady winners. Let's see if it has a big dividend yield. Yeah, sure enough, 5.3% dividend yield. You can kind of just see it in the chart that this one's kind of a slow mover, but you have a beautiful setup here. So what I'm looking at is this peak from the prior cycle. We're currently finding some overhead supply there. So that was the April peak back in 2022. So I think this is a wait and see kind of setup, Jason. You want to see the buyers decisively reclaim that prior cycle peak, which comes in, let's call it 51 and a half, maybe 52 to round that up. But if it's above 52, I think Fortis is going much higher, and I'd be looking at the 161.8 extension as the first target. So that's 62. So 52 gets you to 62 in the Fortis. It's about 20% upside. I think it could get it done in about 3 to 6 months, plus that 5.3% dividend yield. This doesn't look bad. It's not sexy. It's not the I see a request for the Rigetti in the chat from Eric. It's definitely not a quantum computing stock, but I like the setup here. Who brought this one along, Jason?
That was 1 second. Looking at this stock, looking at the dividend yield, that's pretty high.
Yeah, it is. Yeah,
It's
yeah.
Jeff. Jeff brought
Jeff.
it. Yeah.
Okay. Cool. I would also look at it relative to the XLU, Jeff. Fortis isn't really a leader. You can look at it. This is just Fortis relative to its peer group, the XLU, and you can see it recently made a new all-time low back earlier this year. So definitely not leadership in the group, but again, that dividend yield can be attractive to some people. That's not really what I'm here for. I'm trying to make some serious money in the markets. So not 5.3% dividend yield, but
Well, yeah, on dividends, and you know this, Sam, which is sometimes the stocks that have the largest dividends, they have that for a reason. If you go into the shipping sector, you see this like everywhere, which is you could get a shipping stock today with a 13% dividend, and everybody go, oh my God, that's amazing. But why doesn't every investor just own shipping stocks? Well, it's because they give you that amount of dividend, so you basically hold on to it during the bad times, and there's a lot of bad times.
Totally. And it's like a capital allocation thing. Like they don't have a better use for that money. Like
Yes.
Nvidia doesn't really pay a dividend because they have a better use for that money.
Yes.
Yeah, they're crushing it. So yeah, that's a good point, Jason. Yeah.
And you'll see that in tech a lot. Like the companies that have made you the most money over the last 10, 15 years have been tech stocks, and most of them don't have dividends at all. So I'm always, a big proponent of like looking outside of dividends. I think a lot of people, when they first start trading, you hear like income and you hear you can put your money away and it's going to make this. And it sounds really cool. It even sounds cool to this day. However, there's a reason for that dividend most of the time, which is something that you guys should all keep in mind.
Totally, Jason. All right, Jeff, thank you for bringing that one along. What else do we have today, Jason?
The next one is Danny asked about LNG, so that's awesome.
Hey, does this one have a nice dividend yield? I can't remember. Let's see. Yeah, no, it looks like it's less than 1%. Below market dividend yield, $52.5 billion oil and gas pipeline stock, very involved in the natural gas space. And this is probably my favorite equity vehicle to express a bullish thesis in the natural gas space. And CRK has been a good one in the past, but if you pull up a chart of CRK, you can see that one's been blasted pretty hard recently. But this LNG is just a steady winner. I mean, look at this chart, Jason. So let's zoom out. So historically, this one's had monster bull runs. So from the great financial crisis lows to the peak in 2014, this one did like 8,000%. And then from the 2020 lows to the 2022 peak, it did about 500%. And here it is at new all-time highs, which if you look at the if under the hood in energy, there's not a whole lot of stocks trading near all-time highs like LNG is. So I like it from that leadership standpoint. And it's a $53 billion stock. So I'm sure there's a liquid options market there if you're into that. But just more short term, this one's just chopping around here in a big mess. I think we could throw on like a Bollinger bandwidth to show this volatility compression.
Oh yeah.
So let's look at like a monthly chart. Yeah, so like on a monthly chart, you can see it's bouncing off of one of its lowest levels ever. So then you zoom into the weekly chart, and that volatility compression is nosediving towards that lower bound there. So I think it's pretty safe to assume there's some volatility expansion on the horizon for the LNG. Just a matter of when they get the job done. When do we want to participate in this currently sideways trend? So I don't think the fibs are going to help us out very much. I think we could drop a WAP. Yeah, also not very helpful. I think you just really want to buy this one on strength, Jason. On strength above these pivot highs from this year. So you have a June high, the July high, and you also have this gap from earlier this year in January. So there's a lot of price memory around this 245 level in the LNG.
Yeah, I
So
mean, I'd be interested in buying this thing even. It's a great stock. Sam and I have covered this a bunch of times. We talked about it. I remember Kevin used to talk about it a bunch. Kashop's talked about it. It's a good company. It's got great fundamentals inside of the company, but once again, price is the only thing that pays. So sitting there looking at consolidation is always very important because everything is consolidation. If you're looking at head and shoulders patterns, you're looking at flags, whatever you're looking at, it's really just saying there's consolidation. So really, once we get above that zone, and if you look back at that long-term chart that Sam just had up, so if you hit a weekly again, like which way is this trend going? Is it going down or up? Obviously, it's going up. So which way do we want to take the trade? Well, we want to take it to the upside. So 245, great level. I love that you brought this up. I think it was Danny. So great chart you brought up here. I might be looking at buying it again as well. That might be something that comes out too.
the stock is a beast. So
It
yeah.
is. So
One of the best in the energy space too. We could look at it relative to XLE. I'm not sure is the perfect benchmark for a stock like this, but yeah, look at this. This is like a bull flag to me on the weekly chart and in the context of a long-term uptrend. So yeah, steadily grinding higher in absolute and relative terms. This one's
very
a
bullish.
beast.
Very bullish. I love it. So next one up is Neo.
Nice. All right. I was talking with Steve last week about the Neo as this one was ripping above this multi-year downtrend line, pretty decisively breaking out too, Jason. So this one, so from the August 14th pivot low to the peak today, this one's rallied about 50%. This is a $11 billion Chinese EV manufacturer.
It's the one that does the semi trucks, right?
Is that right? I don't know. Let's look.
I just remember it from a long time ago when it first came out, and I was looking into the company.
Yeah, it looks like you're right.
Yeah, that's the one time I will get a stock right on something before Sam. So everybody make note of that. Make sure to write in. Let us all know how great I just did. I'm just kidding, but it is just the one time. But no, I think this the EV trade's coming back, right? It just looks like it. I'm not saying like I know this uptrend will last. I'm just saying at the moment, relative strength is going into the solar sector. You're going to see a lot of these names that have gotten the crap kicked out of them start to pick up and start to trend to the upside. As Sam just drew there before, like you saw a massive downtrend that's getting broken. Now we're seeing it start to break out of consolidation. Now it's starting to take out resistance. Let's see where this thing ends up, because I think it's going to be really interesting. The whole solar sector to me is very interesting right now. I think
this is an EV stock, Jason, not solar.
I know, but that also trades with the solar sector for the most part, and it looks just like a solar stock. It
does look like a solar stock. That's a fair point.
Yeah, they trade. A lot of them trade with that sector, and not to mention if you look inside of the ETFs. I remember I had an investor that was very upset, that we didn't own Tesla, and I was like, oh, we do. We have the TAN ETF. This was back in like 2019 or something. He was like, what? And a lot of the solar ETFs do have a lot of the EV companies in it. That's why they all look kind of similar. But yeah, I think this is in a buy signal at the moment, short term at least. I think once you start getting over those 52-week highs, what's that, over $7, $7.50? Like once you start getting over those or $7.15, once you start getting over those levels, like now we're in a full-on trend reversal. Could be a very interesting one. Don't know a ton about the company anymore these days. I did a lot back in I think it came out in 18 or 19. I did know a lot about it then, but don't know the fundamentals today. But the chart looks great. The sector looks good. I'm interested in it.
Totally. Yeah. It looks like this like seven and a quarter level, let's call it. So this was support back in 2023 again and in late 2023. And then it was resistance in September of 2024. So I think there's going to be some bag holders there over the short term in the Neo. But yeah, if it can break above there, that's where I would get involved personally in the Neo, looking to trade it back towards 16. So this one could potentially double and not a lot of time. This looks great.
No, I
Shout
like
out
it.
to Chinese EV stocks.
Chinese EV, China, man, just shout out China.
Yeah,
China's been killing it.
communism is so back.
Everybody loves communism. I went on DeepSeek the other day and they tried to convert me to communism in like 5 seconds. So that must be why all the United States citizens don't like it. I'm just, I'm just kidding. But it was interesting. It does. I was like, oh, they probably don't have copyright laws, and I needed to do something with a transcript. So I was like, oh, maybe them. So it kind of worked out well. So it's interesting. First time I used it. Don't know if I really want to give it too much information, but that's just me. So
Yeah,
let's
I've
get
never
on.
used the DeepSeek.
You never have? Yeah, I never used it before that, but I was like, you know what? They probably would be the ones to do it because, they don't have copyright laws over there. And that was the truth. So next up we have Wavy. So Wavy's ADM.
So this is a fan favorite around here at the Gold Rush. This one that can trend really well. It can also be dead money for a long time. This is a $31 billion agricultural stock with a 3.24% dividend yield. So they produce, it looks like oil seeds, corn, wheat, cocoa, all kinds of agricultural products. And of course, Jason, they're from Chicago. A lot of commodities move through Chicago, so that would make a lot of sense for them to be based there in the Windy City. And it looks like, just zooming out here, you have this, let's draw it for you. This is resistance turned into support. It's just a big thick line here. So this was resistance in 2006, 2008, 2014, 2016, 2018, 2020. And now it finally looks like they have flipped that resistance into support. And now ADM is bouncing off of that. Is the long-term picture here. And now if you zoom in here, I am going to drop a WAP from this all-time weekly closing high back in November 2022. And
And
sure
look at
enough,
that.
that's coming in right where we are today. So yeah, I think you could get confirmation of that breakout on a close above this high from July of 2024. But that's how I'm seeing the setup. And then you'll have this nasty gap to close that comes in right around $68. So there's still some overhead supply to deal with over the short term, but it does seem like this one is slowly churning this sideways trend into a new uptrend. So that's encouraging to see, not just for the stock, but we've been looking at massive drawdowns and things like corn, Jason, and you can go down the list in agriculture, looking at corn, soybeans, wheat, all of them. Just they look like this,
Yep,
not uptrends.
not uptrends. That's the truth. They're all in downtrends. They all continue to get hit on every rally. And we're seeing a lot of pressure from live cattle, feeder cattle, hogs at the moment. So basically the feed for these animals, there's a lot of pressure on the commodities at the moment. Not all the commodities, but the grains. So the grains continue to get hit, but I think that'll end at some point soon. Once again, I don't know when a trend will end. So cattle, feeder cattle is just ripping to the upside. Put up a chart of feeder cattle just for everybody when you get a sec. Once you're done with this.
Totally. I saw a request, feeder cattle topping out. That came from Frank in the YouTube chat. So
Nice.
yeah, let's definitely look at the feeder cattle. It's not the
Yeah.
FC.
GF.
GF. Not sure what I was thinking there.
Yeah.
But yeah, man, what an uptrend here we've seen recently in the feeder cattle.
Yeah, I mean, it's once again, when you look at a monthly, you're looking at this thing being up every single month for almost a year now. Once, if we end this month up, which I'm pretty sure we will, it will have gone up every month for a year. Why does that look different than the one I brought up the other day? There is a down month. Is that a down month or is it
It
just
was no, I'm looking at hollow candles.
okay? So it's not a down month then. Okay.
Yeah,
Yeah, so
I think
basically
it
it's been
checks
up
out.
every
Yeah,
month
this is a
since
beast.
September. Yep, since September last year. So if we close this month higher, well, not even higher, where we're at another 5% lower, even we're going to be up for a full year in feeder cattle. I'm sure, and I know a lot of people on here are like, why are we talking about feeder cattle? I know I'm one of the few people who trades futures, but everybody eat like, well, not everybody, but a lot of people eat meat in the United States. And if you've gone to the store and you bought a steak recently, a little like 8-ounce steak costs you about $12 now. It's just getting ridiculous. So at some point this will end. And usually commodities don't end in a pretty way. Usually that's going to be a crash. Something wild will happen. But once again, I'm not going to sell my position in feeder cattle. I'm going to just hang on to it because I don't know when a trend will end. But I think when that does end, we'll start to see that move in corn. We'll start to see it in soybeans, wheat, and so on. Those will start to take over. And that's what a lot of people have been kind of waiting for. But at the same time, for me, I'm just looking at it like, hey, the meats are doing crazy. They're just moving. I don't want to get in front of this bus. I want to just ride it. Continue to just have a trailing stop or move up stops if you are trading it, and then be willing to get out when it happens, when the trend breaks. Trend is your
Totally.
friend until the end when it bends. That's the truth.
Yeah, it looks great, Jason. Getting overbought on every single time frame virtually.
Yeah.
Yeah, what a beast.
Yeah.
I'm here for it too. My family, we have a lot of cattle, actual heads of cattle that we ranch here in Kansas. So I'm here for it, Jason. I know you as a futures trader, you love trends like this. This is what you live for.
Oh
This
yeah.
doesn't happen all the time in commodities, though. We've
Nope.
been very blessed recently, like with trends in cocoa a few years ago. It's kind of died down recently, but this was another historic trend for commodity futures traders. 400% in like a year in cocoa, like that's unheard of. That's
There's an interesting story there because we're talking about trends, and so this is an interesting story, which is by the time the cocoa trade actually happened, I remember talking to a friend. Probably it was about 2 months after it happened. I was like, "Wow, man, cocoa's given us false signals for God knows how long." Go back on that chart for a sec, Sam. Go go back a little bit further on cocoa. I think you could go back to like 2012. So basically, yeah. So after the commodities cycle that happened in 2012, we basically just kind of went sideways, and then we consolidated like crazy from 2016 all the way until 2023. So that was just a wild consolidation that just didn't go anywhere. And so basically, you got false signals over and over again. And a lot of the professional trend following traders, a lot of the futures funds, and so on, they took cocoa out of their system. So at that point, when the trend actually took off, cocoa was out of their system. So they just weren't taking signals in it. Not to mention the ETF for cocoa was delisted right as it started to move. So, this is what kind of happens in trading, which is like sometimes you're in these situations where you have to continue to take that trade over and over again. And then once that trade really takes off, like it'll pay for all those small losers or frustrations. Like they weren't all losers, but a lot of them were just flat trades and just a waste of time over and over again. And then you get that one trade that goes up, 300, 400%, and it pays for all of your losers for that entire year or 5 years even. Because we're talking futures, which means we're leveraged. So, 400% could be something more like 4,000% if you're crazy and you use way too much size. But really, it should be something like 1,400%. And that's the type of move you're going to see in the commodities market. That's the thing, and we covered that from day one. We covered cocoa, the breakouts, the second move that it actually had, all of it. So we cover a lot of that at the gold rush.
Totally, Jason. Yeah, and we're kind of seeing that sentiment in energy. You mentioned the delisting of the cocoa ETF. Like, I don't think there's been any major delistings in energy, but you're kind of seeing that sentiment. Like nobody wants to touch the energy stocks. Look at XLE relative to SPY. Like it's a totally fair point. Like this has been, nothing but a headache since it peaked in 2022. But you can see here that I drew this up last week. Yeah, looking at a breakout here from a multi-week or multi-month drawdown in the relative trend here. So I think that this prolonged downtrend in energy that nobody wants to be involved with could potentially be ending here, and maybe a new sideways phase before we enter a new uptrend for energy in relative terms. But
No,
yeah,
I
I think
agree.
that's exactly the kind of sentiment you want. You want the ETFs delisted, you want the funds pulling it out of their systems, all of that. Yes, give it to me.
Yep, exactly. Great point, Sam.
What else do we
On
have,
to the next
Jason?
one. Futu. Futu. Futu.
Is
What?
this another Chinese name?
I don't know what Futu is.
This
Sounds
is a
like a type of food.
$30 billion stock. Looks like it's, yes, man, I'm good. This is a finance stock from Hong Kong. So shout out to Hong Kong. And this chart looks excellent. This one has been on my radar for some time, looking at this peak from the prior cycle. And I gotta be honest with you, Jason. I think Futu is gonna get it done before long. Look at this base. I think this one could potentially go towards 300 before you know it. It's currently trading. It's about $6 below 200. So I think a serious move is coming for the Futu. But for me personally, I need to see a decisive breakout above this February peak from 2021. So that would come in, let's see, the high was 20, let's call it 205 in the Futu. If we see a close above there, I think it's all systems go. This one's likely heading towards 320, maybe $500. But yeah, looks excellent. And I think you can also look at it relative to the FXI, large cap Chinese ETF, and you can see that this one is already breaking out, Jason. Look at this. New all-time highs for Futu in relative terms. So if you're looking for a leader in China, look no further than the Futu. This one's a monster.
No, I like it. I think that's just looking at the chart, and I just want to make a reference for people who are new to charting. When we're looking at charts, Sam is always using these very wide draw or lines for support and resistance. And there's a reason why, which is like if you talk to old traders, they'll always say resistance and support should be drawn with a crayon or a marker, not a pencil. And like, when you start to understand, like these people, most of them, when they started trading, they were just drawing their charts on graph paper. So they're drawing them on graph paper.
They literally used crayon.
Yep, they literally used crayons and they literally used markers. So, why we do that is because these lines are not going to be perfect. There should be a zone where you want to get above. And then there's also closes, and there's also wick, and there's also all of these things. So most of the time you want to draw it that wide and then really highlight if we get over it, like that 205 level, like Sam highlighted. So just a quick charting lesson right there, but that's the reason why we use them and make them wide. And I think it makes a lot of sense here, especially looking at this one, man. This could be another breakout that could really happen and just take off. China is just taking off. Asia's taking off. Globally, global stocks are taking off. I don't see that stopping anytime soon. So I think there's some great trades here.
Totally. And I love the finance aspect of this too. Sure, there are plenty of tech stocks in China that have been doing really well, but zooming out, looking at the big picture in Asia and in Europe, financials have been the leadership. overseas and to a large extent in the US too. And I would argue that these are the most important stocks in the world. Financials. You don't have bull markets without financials to see them performing as well as they are. Not
especially
only,
globally.
yeah, it speaks to the raging bull market we're in, but it also provides a lot of amazing trading opportunities. So yeah,
So
I like
that,
these stocks a lot. So shout out whoever brought this one along. I
that was
will
Hanson.
Hanson. I'm gonna set an alert on my system to tell me whenever this one closes above 205 because I want to get involved. I do not want to miss the breakout in Futu because I think this one is going much higher. And to build on that, Jason, I think this is my chart of the day. I mean, we're not done with the show yet, but somebody's gonna have to pull out a really good ticker to beat this Futu setup because
Oh, somebody did bring a pretty cool one that'll be fun to look at. UUUU from Nick.
okay.
Yep.
So yeah, Jason, yeah, you're not wrong. This is also an amazing setup. So this is
Put a line chart on that for just
yeah,
1 second. Yeah. So this was one that I got an alert for the other day. Once again, it's not something like I don't tell people to go out. Like if you're gonna buy uranium stock and you really want to get involved in uranium, Sam and I kind of have the same idea on it, which is like CCJ is an easy one. A lot of these are very small and they move like crazy and they can move against you. But if you're an experienced investor and you know how to trade it, like there's money to be made here. So I think a lot of these uranium stocks, I think there's a lot of money to still be made. I think they look really good. I think we're just seeing these setups kind of across the board and a lot of them right now. So I'm glad that this was brought up today. Should be on everybody's radar because these things make a lot of money.
totally, Jason. Yeah. Everybody's talking about like the SMRs and the all those what do you call them? AI utilities, if you will. But if you really are interested in trading the space, like I don't think you should just have exposure to those stocks. Like you should have the CCJs, like the Exxon Mobils of the space, the companies that are actually digging their uranium out of the ground and fueling this AI revolution. So yeah, I think Energy Fuels, the UUUU, should be on the list. This is a great setup, and it looks a lot like a lot of financial stocks. A massive drawdown from the great financial crisis into just a ginormous sideways consolidation accumulation pattern just now breaking out. Kind of reminds me of some European banks, like some the Citibank. A lot of those charts
It's a
look like
10xer. It's a 10xer. Like this is one of those that could go 10x pretty quickly. And like that's a thing that a lot of, and I don't say things like that a ton, but
no, you don't,
I
Jason.
don't.
No.
But looking at like this type of a setup in the uranium space and living through like seeing the uranium cycle and all of these trades take off back in the day, this thing's definitely going to be another one that probably takes off. I'm pretty sure this is one of the U.S. companies. Is that right, Sam? Just want to double check with you.
I think so.
Yeah.
It could be Canadian, but
I think it's a U.S. one. I
same
think
thing.
Energy Fuels is.
Lakewood, Colorado.
Yep. Okay.
Yeah, you're right.
Yep. So this is one of the U.S. companies. It's one of the safer bets if you're going to get into the space and try to buy something that's a little bit smaller than CCJ. It's one of the safer bets in the space. So I think this thing's going to take off. Not to mention, United States, we're really starting to open up to using more nuclear, using more uranium, and so on. So as we open those things up, companies like Energy Fuels are going to do really well. And the chart looks great. Great setup. Glad you brought this up, Nicholas. I know we have to dip, but man, this was a lot of fun, Sam.
Totally. This was awesome, Jason. Thank you for joining me today.
Of course.
And yeah, I think, yeah, Futu and the Energy Fuels, those are my two top charts of the day. Did anything else stand out to you, Jason? Maybe the Archer Daniels Midland?
I like the Archer Daniels just because it's something that I pay attention to just to understand the commodity cycles. But I'm also with you on it. You. Oh, I said five there.
A lot of use.
All the U's in the world. Energy Fuels looks great. That's probably my favorite for today, just because that's the space I really like. But also Futu, chart wise, that's perfect. Phenomenal chart. Glad you guys brought this up. You guys got great eyes for charts. And we'll see you guys soon.
Totally. Yes. I appreciate everybody being here. I'm sorry we didn't get to any of the tickers in the YouTube chat, but as always, if you want us to get to your ticker in the next episode of Chart Request Live, do not hesitate to send your request to questions@stockmarketmedia.com and we will get to it first thing next episode. So yeah, appreciate you, Mr. Zerby, Wavy McFly. We've got Lobs, Eric, Frank, everybody in the chat. Thank you for being here and making this such a great experience for us and bringing charts to our attention that maybe might have slipped past our desks without us noticing. So you guys are helping us and we're here to help you as well. So I appreciate you being here, and we will catch you same time, same place next week for Chart Request Live. And be here for the morning show tomorrow. And I hear that Mr. Jeff Mackey is going live tomorrow with JC as well. So if you're interested in retail, say that again?
1 p.m. Eastern time?
I think so, yeah. Jeff Mackey is my hero. He is absolutely amazing when it comes to analyzing retail and all things consumer related. This guy's an absolute legend in the industry. His father actually was an executive at Target back in the 20th century. So, you know, as a kid, Jeff grew up looking at these retailers and
Sam,
going.
Did you just say back in the 20th century? Oh my God, I'm getting old.
You are old, Jason. Embrace it. Okay, nothing wrong with that. Yeah, Jeff is the man. So if you want to learn more about that, be here on our network tomorrow afternoon for that. And yeah, we'll leave it there for today. But thank you for being here, Jason. This was a lot of fun.
Yep.
And all right, everybody.
With, Gold Rush Premium soon. See you guys later.
Right. All right. Adios, everyone.